because consumer prices rose as expected in October, keeping the Fed on track to potentially lower interest rates again in December. The latest inflation data showing progress, but still remaining above the Fed's 2% target on an annual basis. For more on what this does signal for the economy, let's bring in Citi Chief U.S. Economist Andrew Hollenhorst. Andrew, it is good to have you on the show. Let's start there with that CPI report, Andrew. What did you make of it? I know there was plenty of noise there, but you look at the underlying trend and you see what ahead?
Yeah, I think when you look at the underlying trend, you do see inflation that's cooling and probably on track to cool back towards the 2% target, at least cyclically. That's going to give the Fed a runway to keep policy rates headed back towards neutral rates of interest. So I think although this inflation report, if you annualize the monthly number, you're coming in a little bit above the 2% target. If you look at core PCE inflation on a 6-month average basis, that's at 2.3%. So the Fed's pretty close here, and you're seeing things like shelter prices that are cooling, non-shelter services that are cooling. So a lot to really build the Fed's confidence they can keep cutting in this report.
It does feel like the shelter, though, is the sticky thing. Yes, it's cooling a little bit, but not by very much. We know that mortgage rates are not coming down by very much either. So, what does that path look like? Where's that easing going to come from?
Yeah, that really has been a challenging part of the inflation story. And of course, the challenge for the economy is the high price of housing and high mortgage rates. Minneapolis Fed President Kashkari talked about this today, and what he said is the same thing that I would say, is that if we look at where rents are coming in now, and inflation as we measured in the US is based on rents, those new rents are rising at a much slower pace. And when you look at the official inflation statistics, that's looking at rents that are resetting maybe from a year ago, 2 years ago, 3 years ago. And we know that those rent increases are going to converge to the slower pace of increase that we're seeing now. So what Fed officials like Kashkari are saying is that we're really looking backwards when we look at that official data for shelter inflation. If we look at the current on-the-ground facts, we're already seeing softer shelter inflation. So I think they can kind of look through that in the near term.
Do you see, Andrew, next year, do you see the Fed taking a pause here?
I don't know that they need to pause. I think they probably at least get down to 4% policy rates before they would really seriously think about pausing. What Chair Powell said last week at the FOMC press conference is once they get in the range of where they think neutral rate might be, they might want to be a little bit careful about, are they going beyond neutral? Where exactly is neutral? There'll be a whole conversation next year about where that is. But I think at least for December, for January, they're probably on track to just keep cutting rates.
The other thing economically that's getting as much, if not more attention right now than the Federal Reserve, unusually, is the election and the results of the election. And yesterday at our Yahoo Invest conference, we heard from Joseph Stiglitz, of course, noted economist, and he sounded a little bit more cautious on the outlook here. So I want to listen to what he had to say.
We are in the soft landing, but it ends on January 20th. And that's when we start getting into a harder place where we don't actually know where we're going to go. That uncertainty, by the way, is not good for the economy.
So, that uncertainty is not necessarily being expressed by the market, right? The market seems to think pro-growth policies, everything's going to be great. What do you make of what Stiglitz is saying is that, and that element of uncertainty?
Yeah, I think there are still some questions that need to be answered about what exactly policy is going to look like. And I think we'll get some of those answers in the coming months. I do think that there's been a tendency to maybe put a little bit too much weight behind the idea that the Federal Reserve is not going to be able to cut interest rates because of what's going on with policy. Yes, deficits are large. They're probably going to stay large. It's not clear that there's going to be policy to address that. But maybe the biggest piece of fiscal policy that received attention in this election is continuing the tax cuts from 2017. If you continue an existing tax cut, that's not adding new stimulus or new inflationary pressure to the economy. That's just continuing fiscal that's already there. If you allow those tax cuts to expire, that would actually be a restriction on the economy. So I'm not as worried about new stimulus that's going to boost inflation. And then you turn to tariffs, which is the other thing that's getting attention. And Minneapolis Fed President Kashkari commented on that today. We're going to hear from Chair Powell tomorrow. Let's see if he says something about it. But the first move for central bankers when they think about tariffs is to think about that as an increase in the price level. And I know we kind of talk about a price level change versus inflation. What's the difference? The difference is, do you think it's going to continue? Do you think it's something that continues? And
is it a one-off, or is it something that's going to be consistent?
And that's what Kashkari said. If it's tit for tat, if we have countries that are raising tariffs on each other, it's more of an inflation risk. Maybe that's hawkish for the Fed. But if it's just a one-time rise in the price level, I'm not sure that's hawkish for the Fed.
Can I ask you, Andrew, at the top of the show, we were talking about what we're seeing in the financial markets, just the rip we saw in the stock market. Bitcoin is really working. I mean, how as an economist do you think about that? Because we've been talking about an economy that's, we use words like it's decent, it's hanging in there, it's resilient. But when you see moves like we're seeing in the financial markets, as an economist, does that indicate to you, well, hold on, maybe it's not just resilient, maybe we're actually are we warming up here?
Yeah, I think you want to be careful about reading from the equity market what's going on in the economy more broadly. And that has kind of been the story of this economy, that if you look at the largest corporates, if you look at the wealthiest individuals, they're doing very well in this economy. If you own a house, you have a low rate mortgage and your house price has gone up, that's a great place to be. Maybe you own equities and the equity prices have gone up as well. If you're an individual that is renting and your rent has gone up and you're making payments on a credit card and that credit card debt has a floating rate associated with it, so you've seen that rate of interest go up, or you're trying to become a first-time home buyer and we're talking about high home prices and mortgage rates that have actually moved higher since the Fed started cutting, you're really getting a tale of two economies in a way there. So I would see what's going on in financial markets much more about what's happening for the wealthiest and the largest corporates and maybe not representative of the economy as a whole.
I wanted to go back to fiscal policy and what we could expect here. Of course, we've all been talking about the new DOGE, not coin, government agency or extra governmental agency. That is the one that has been going to be headed up by Elon Musk and Vivek Ramaswamy to try to cut from federal spending. Now, I was taking a look at federal spending as a percentage of GDP because it does contribute, of course, to GDP. Right now, it's around 20%. It's come back down towards sort of the longer-term trend. So how much is that a concern that they'll cut away some of the GDP, or are we relatively confident it's going to be made up for by some of the other sort of, again, stimulative policies?
Yes, I think this all goes into the category of questions that need to be answered. There's probably going to be a large fiscal bill that comes out at the beginning of the Trump presidency, the new Congress, with Republicans controlling the Senate, likely the House, using the reconciliation process to pass that. And it may come down to a slim majority in the House with just a few Republicans controlling that majority. Who are those few Republicans? How do they feel about spending restraint? That may be a question that we're asking. So I do think there are questions to be answered still about what the size of that fiscal is. Again, I would emphasize maybe the single biggest fiscal issue is this extension of the tax cut, which is not going to be new stimulus.
But it's not counted in the deficit calculations yet, is it?
It's not counted
in the estimates.
Exactly. So when we look at the deficit, that's going to be a number that comes from the Congressional Budget Office. They're going to assume that those tax cuts that sunset, according to law, sunset in their forecast. Right. So when you extend that, those deficit numbers will be bigger. So there is a deficit debt issue in the U.S. At some point, it needs to be dealt with, and that will have economic effects when it is.
We'll talk about that next time, Andrew. Thanks for being here. And probably the time after that and the time after that. Thanks, appreciate it.
My pleasure.